After preparation of trial balance, we need to prepare final accounts. Okay, in accounts, final accounts includes trading account, PL account, and balance sheet. Okay, in trading account, we basically include all the direct expenses. Okay, direct expenses, items such as purchases, wages, carriage inwards. Okay, these all are debited in the trade account debit side. Okay, and credit side we often write sales return is subtracted from the sales. Closing stock we show in the credit side of the trading account, and in the debit side of the trading account we show it opening stock. Okay, from trading account we get gross profit or gross loss, which we use in the later PL account, profit and loss account. Profit and loss account, after preparing trading account we prepare profit and loss account. In profit and loss account, all the indirect expenses and indirect revenues are taken. Indirect expenses are shown on the debit side of profit and loss account, and indirect revenues are shown on the credit side. After preparing profit and loss account, we get net profit or net loss, which we use in the balance sheet in the capital. Okay, balance sheet in the liability side, in capital we use that net profit or net loss. In case of balance sheet, we have two columns, liabilities and assets. In liabilities column, all the liabilities amounts are shown, accounts are shown. In the assets, whichever the current and fixed assets are there in the business, that are shown in the balance sheet. So based on this trading, PL and balance sheet, okay, we can discuss few sums. Like here we can see one question. Opening stock is 23,000, purchase is 29,000, sales return is 500, sales is 25400, purchase return, closing stock, carriage inward, depreciation. So I said you in trading account all direct expenses. So opening stock will be coming in trading account, opening stock will be shown in the debit side. Purchase will also come in trading account, that will be showing the debit side. Sales return, it will come in the credit side of the trading account. Sales is also there, it will come in the credit side. Purchase return, it will be subtracted from the purchase in the debit side of the trading account. Closing stock, it will be shown in the credit side of the trading account. Carriage inward, yes, carriage inward is shown in the trading account, but carriage outward is not shown. You can put a star mark that carriage inward is always shown. It is a direct expense, carriage inward, but carriage outward is considered as indirect expenses and it is shown in the PL account, but carriage inward is shown in the trading account. Depreciation is an indirect expense, depreciation will not come in trading account. Okay, so based on this information, opening stock, purchases will be showing in the debit side, opening stock, purchases, and carriage inward will show in the debit side, and sales less sales return and closing stock will be showing in the credit side of the trade. When we move to other sum, here they have mentioned opening stock, closing stock, purchases, carriage on purchase, carriage on sales, office rent and sales. These are the items mentioned here. Now in this sum you see opening stock, as I said you, opening stock will be showing the debit side of the trading account, closing stock will be shown the credit side of the trading account, purchase will be shown the debit side. Carriage on purchase means it is carriage inward, carriage on purchase means it is carriage inward, it will be showing the debit side of the trading account. Carriage on sales is carriage outward, carriage on sales is considered as carriage outward, so it will be considered as indirect expenses, it will not come in trading account, it will go in PL account. Office rent is also an indirect expense not related to production. Sales will come in the credit side of the trading account. After putting the amounts in the necessary columns, you can do the totals and you can take out gross profit or gross loss. Next sum, stock on 1st April 2021, 40,000 is the stock. 40,000 is the stock, purchase is 4 lakh, sales is 3 lakh 80, carriage inward, yes. So purchase will go in the debit side, sales will go in the credit side, carriage inward in the debit side of trading account. I said to carriage inward will be coming in this, but carriage outward will go in the PL. Return outward is the other name of purchase return, okay, which you have purchased, you are returning, okay. Return outward will be subtracted from the purchase amount, okay. Purchase less return outward. Wage and salaries will be considered as direct expense and it will be shown in the debit side of the trading account. Return inward means sales return will be subtracted from the sales amount in the credit side of the trading account. And stock on 31st March 2022, it is refers to the closing stock which will be showing the credit side of the trading account. Here at the end of the sum you can see two amounts are given. Closing stock, one amount is 1,30,000 and last day's net realizable value or market value of stock is rupees 1,20,000. You will always take the lesser amount, which amount is less. So here I can see market value is less, 1,20,000, then that book value 1,30,000. So closing stock real amount will be 1,20,000, which you will be showing in the trading account credit side. Next we are having adjusted purchase 6,60,000, sales, closing stock, freight and carriage inward. wages, freight and cartage outward. Okay. What does adjusted purchase means? Adjusted purchase formula is net purchase plus opening stock minus closing stock. Adjusted purchase formula is what? Net purchase plus opening stock minus closing stock. What does net purchase means? Purchase minus purchase return is net purchase. Purchase minus purchase return is net purchase. So when adjusted purchase is given in the question, it means what? Net purchase means already purchase minus purchase return they have done. Okay, purchase minus purchase return they have done, and they have already added adjusted purchase. What is the formula I said you? Adjusted purchase formula is net purchase plus opening stock minus closing stock. So if adjusted purchase is given the question, then you don't have to take opening stock and closing stock in the answer. Okay, you don't have to write opening stock and closing stock separately. Why? Because in adjusted purchase already opening stock and closing stock calculation has been done. Okay, so in this sum simply you will put adjusted purchase in the debit side of the trading account, sales will go in the credit side of the trading account, closing stock you don't have to take, freight and carriage inward is a direct expenses, it will be coming in the debit side of the trading account, wages will be coming in the debit side, freight and cartage outward, freight and cartage outward is an indirect expenses, so it will not be coming in trading account. Then if you do the solution, I think you'll get the answer. After trading account, we are moving to next sum, which is preparation of profit and loss account. In profit and loss account, I said you all indirect expenses, the indirect revenues will be coming. So in this sum, we are seeing salaries and wages paid is 3,000. So it will be coming as indirect expenses in the debit side of PL account, profit and loss account. Commission paid, debit side of profit and loss account. Postage, debit side. Insurance, debit side. Interest paid, debit side. Carriage outward, indirect expenses, it will coming in the debit side. Advertising, it will be coming in the debit side. Discount allowed is an indirect expense, it will also come in the debit side. Rent received is an indirect revenue, means your earning, so it will come in the credit side of PL account. Interest or investment is also your revenue, means you are getting is a source of income. Okay, it will come in the credit side. Bad debt is an expense, you will show in the debit side. Brokerage paid, that will be also considered as an expense, and it will be showing the debit side of PL account. Next line they have mentioned the gross profit was 45% of the sales. Yes, I said you after preparing trading account we have to prepare PL account. So in trading account, whatever the gross profit or gross loss you are getting, you have to transfer in the opposite side. Suppose gross profit you are getting which comes in the debit side, that will be coming in the credit side of PL account. And if suppose you are getting gross loss which comes in the credit side of trading account, that will come in the debit side of the PL account. Okay, crisscross. Okay, so here they mentioned that gross profit was 45% of sales, which amounted to 65,000. In this sum the gross profit is mentioned. The gross profit amount where you write, you write in the credit side of the PL account. The gross profit 45,000, first you'll write, okay, first you'll write the gross profit amount in the credit side of the PL account, and then you write whatever the indirect revenues are mentioned. Okay, so by gross profit BD at the top. In the trading account we write to gross profit CD, here we'll write by gross profit BD transferred from trading account, amount will be 65,000. After that you do the calculation, you get the net profit or net loss in the PL account. Okay, from trading we get gross profit or gross loss, and from PL we get net profit or net loss. After that next sum again we are saying gross profit is given. The gross profit is given to where it will be. It will come in the PL credit side. Rent means is an expense, debit side it will come in the debit side of PL account. Salary debit side of the PL account. Commission paid debit side of PL account. Interest on loan, so you are paying interest on loan you have paid, so you can consider as an indirect expense, and it will write in the debit side of PL account. Advertisement debit side of PL account. Interest received, it is an income, so it will be written in the credit side of PL account. Discount received, credit side of PL account. Printing and stationery, credit side of the PL account. No, printing and stationery, sorry, it's an expense, it will come in the debit side of PL account. Legal charges, debit side of PL account. Bad debt, debit side of PL account. Loss by fire, debit side of PL account. Depreciation, debit side of PL account. Bad debt recovered, you have received the amount, it will come in the credit side of PL account. Then you will do the calculation, you will get the net profit or net loss. After that they mentioned to draw a balance sheet, prepare a balance sheet. Yes, in balance sheet what happens? Assets and liabilities and assets. Okay, capital will go in the liabilities column. Drawings, from capital you have to minus drawings. Debtors in the asset sides. Creditor liability side. Cash in hand is a current asset, will come in the asset side. Cash at bank same, asset side. Plant, it is a fixed asset, it will come in the asset side. Furniture, fixed asset, it will come in the asset side. Net profit you have to add with the capital. General reserve, it will come in the liability side. General reserve, the fund which you have created. Closing stock will be showing in the asset side of the balance sheet, and after doing balance sheet will match, means your sum is correct. In same other sum,